I'm back, and I'm here to tell you that you've all been missing the point with the market here, ladies and gents. We're not even going to go into this short-term chart right now because the first thing that I want to cover with you guys is the longer-term trend that we've actually seen developing right here. I was actually talking to MDX Crypto today. I'm out here, just been hanging out with him for the last few weeks, and you know, one of the things he told me today, which was actually really interesting, is that the market right now is almost in a phase that looks a little bit like this right here after the big COVID crash and of course subsequent recovery of March 2020. And it's actually very much along the lines of what I wanted to talk to you guys about today as well, which is that even despite this little drop down to 25k here, if we just pretend this didn't happen, and we don't need to, by the way, even knowing that this happened, what I'm about to say isn't invalidated. It actually makes my point a little bit stronger, but let's just gloss over this for now, and let's pretend the only price action we've actually had has been here. Then really, if we break down what we've been seeing here, and I'm about to blow your mind, so throw me a preemptive like if you trust me, because you know you got to trust your boy. Also, make sure you subscribe, all that good stuff. We'll talk about you know, the call outs a little bit later, but you know, we had the big crash. We came down from 69k, and basically in one leg, you know, overall on a macro scale, weekly chart, for example, you know, it was relentless. It wasn't even, to be honest, even on the weekly chart, it wasn't one leg. We had, you know, a leg here, recovery, leg here, recovery, and then you know, kind of a final big drop. Also, interestingly, those of you guys that love Elliott waves, this is a perfect Elliott wave, Elliott impulse wave here, and there's something to be said about that as well. Let's actually talk about that for a second because that's really interesting. As we know, if we've studied Elliott waves, wave 1 is going to look something a little bit like this, but wave 3, the next big wave that actually continues the trend, wave 3 is always the biggest one, and then we have the final kind of drop down. So a very, very nicely formed Elliott wave. And by the way, that actually means typically, if you are sticking with Elliott wave theory, that you're gonna see an ABC somewhere. And you know, this is the problem with Elliott waves, and it's the reason that I almost never talk about them, because it's actually it's too subjective. It's way too subjective. You know, the Elliott wave defender is going to be like, oh, but if you use it properly, like, no, you guys that use it properly all have different analysis too, and that's why you're wrong most of the time too. But anyway, different day. It's just the reality, guys. I mean, I think it's an amazing way to do analysis, but time and a place. And most of the time, at least in my experience, you know, you just don't find the right time and place for it. It's way too subjective, and oftentimes it's wrong. But if we are getting an ABC, it could have looked something a little bit like this, and we're already done. Or you know, obviously I think more likely, you know, it's potentially, I don't know, something a little bit like this, not even, because I don't really think that we're going down that low, you know, so potentially something a little bit more like this. You know, this would be, you know, quite juicy, you know, like a 40k, 41, 42. You guys have known that those have been some kind of far-reaching targets for me for Bitcoin right now, you know, getting up to there, and then a big deep pullback. I mean, you know, something a little bit like this, 40% down, is enough to really scare a lot of people. As we know, if you've been watching my channel for the years previously, you're going to remember that I've always kind of told you guys that actually when Bitcoin suffers a 40% correction, that is typically where you know, you're actually going to be in a situation where you know, people are going to get too scared. They're going to panic sell their Bitcoin, and it's just where it's enough. You know, it's not to say that that's where we're going to stop falling, but it is to say that typically that's enough of a correction for the market, especially in a, you know, kind of bullish environment, which we're kind of not in right now. But just generally speaking, 40% is enough to kind of, you know, end these corrections. I do want to, you know, everything I'm talking about, because it's so easy and quick for me, I do want to back up what I'm saying with data so that you can actually see what I mean, just to make your life easy, you know, because if you go looking for this, it might take you a little bit longer, but I've fucking memorized this chart because you know the deal, like eat, sleep, breathe, shit Bitcoin. That has got to be one of the mottos of this channel. Look at that, 40%. This was back in 2017. This was actually, you guys may know this if you've been watching me for a while, this is actually the first and last time that I ever panic sold Bitcoin. I bought Bitcoin at about $2,000, if I'm not mistaken, somewhere around here. I bought Bitcoin before, but the first kind of substantial buy was around here. And then I panic sold basically right at the bottom, and then I bought back right up here. So trust me when I say it, guys. When I tell you I've made every fucking mistake 10 times more than you've even dreamt of making those mistakes, it's true. I really have been the most degenerate, disgusting, pathetic trader ever. And actually no, because the NFT guys may have actually topped me there, but you know, I've been pretty bad, and that's why I speak with so much passion. But here we go, you know, here's another one, 40%. That's all it takes sometimes, you know, for these corrections. This one was a little bit less, but you know, still 30%, kind of in that range. So you know, these 40% drops, you know, you do want to pay attention to them. Here's another one. What is this? This is 32, and another one right here, this is about 36. So you know, very much in this range. Here's another one. This one's 40, if I'm not mistaken, just off memory. Yeah, 37, pretty close. You know, very, very normal. Here's another 39%. So, you know, I'm just giving you an idea here. I'm talking to you about a possibility of the market, and this is really important because, you know, one of the things that we need to do as traders, and you guys know the deal. I'm gonna get to the you know, kind of, you know, macro analysis I wanted to share with you guys, but you guys know the deal when you come to this YouTube channel. It's not just about analysis. I'm a derivatives trader. I'm actually trading these markets, as you guys know, on BingX and Bybit primarily here. And by the way, I don't think it's updated in the description yet, but and I need to fact check this again just one more time, but you know, you are actually up for over $100,000 in bonuses with BingX right now, with the link that I've put for you in the description. So just go ahead and check it out. This is not the most up-to-date description, obviously. Go ahead and check it out. BingX is a platform that allows you to trade stocks, forex, indices, commodities without KYC, with Bitcoin, with crypto. So extremely flexible. It's got huge selling points for people that are a little bit more privacy minded, and you're now getting over $100,000 in bonuses when you sign up using my link down below. Bybit also giving you up to 30k. So huge offers. Bybit remains the best platform in the space. I knew this before I started working with them, and that's why I've been a client of theirs for a very long time, and that's something that I'm very proud to be able to say even up to now in 2023, many years after I've been using Bybit. So extremely strong choice. Check it out with the link in the description. You know, the point is, guys, you know, this is not just an analysis channel. This is also a trading channel. And, you know, being a trader means that you learn what realistic movements look like. You know, a lot of people don't know what a realistic market movement looks like. They can't imagine it. You know, in their eyes, it's staircase to heaven or waterfall down to hell and nothing in between. But obviously, we know that that couldn't be further than the truth, further from the truth. So, you know, actually quite a compelling thing to be keeping in mind, in my opinion, is what does a realistic pullback look like? What have they looked like in the past? You know, is it going to happen the same in the future? Maybe, maybe not. But the best information we have is historical technical analysis. So here I am, and that's why you're here as well. Now, here's the thing that's really interesting. We had this big drop down with a beautiful Elliott wave. And, you know, I mean, in its own way, it was a market-defining bear market. I mean, you know, this has been, you know, I mean, so many people that I know who've been in the space for 10 years or more have told me that this is the worst bear market they've ever seen, which I think I haven't, you know, I've only been here since 2017, but I feel like they're exaggerating. You know, I feel like it's just perhaps in the past people didn't really care that much. You know, but the fact is that, you know, the crypto market, you know, despite everyone telling you we're early, you're not fucking early, bro. Trust me, I'm here to tell you, you're not early, you're here already. And I know you think you're smart, you probably are, but there's a lot of other smart people just like you that are in as well. So you're not fucking early. Let's stop this narrative. It's losing people money, and it's getting people into bullshit traps. You're not early. And that's why, and you're not late either, important note. But that's why, you know, this bear market has been really destructive. It's because, you know, it happened at a time where actually there was a lot of institutional interest in the market. There was a lot of people. Basically everybody really that I know that wanted to buy crypto bought crypto during the 21-22 bull rallies. And obviously we saw how that went for everybody. 2022, by the way, to put this in perspective, this is the beginning of 2022. This is the end. The entire fucking year we were losing money. You know, it was pretty brutal. You know, a lot of the time with kind of bear markets, you have rallies, you have some relief. There wasn't really any of that over here. So, you know, it was quite a brutal one. And again, so, you know, you look at what happened with COVID and it's very similar. You know, I mean, yes, the market wasn't as big and we can point out differences all day long. But the fact is this was a big fucking deal. All right, Bitcoin had a really good chance to continue rallying up, but because of a black swan event that nobody could have seen coming, the market actually crashed down by 63% within less than 30 days, within less than a month. Okay, if you've got 100 grand in Bitcoin, you're now down to 37K within less than a month. You know, that's the level of financial losses that only people in countries like Zimbabwe, Venezuela, Lebanon, Turkey, only people in these countries have actually experienced these losses. But we had it here in crypto. And it's normal. We've had this kind of stuff regularly, but this one was a big deal. And again, what makes this all really, really interesting is that while everybody, including me, by the way, I was a naysayer in this range. This is actually one of the times where I got it wrong. You know, when everybody here was like, yeah, but you know, it's not really going to work out. We're going to drop back down. I know now, by the way, it looks really stupid that I didn't believe in it, but yeah, I just get things wrong sometimes. I know it surprises me too. It doesn't, obviously. And you know, and so this was a range where, you know, basically all we were doing was consolidating at a top, and everybody was still super bearish. After a major market crash and a major recovery, we just kind of start consolidating. You know, and one of the things, you know, and I learned from my mistakes. This is what a lot of people don't do. You know, one of the things that we really need to keep in mind is that if you're in a pre-existing bullish trend or bearish, and you've been consolidating for a really long time, guys, if you get the breakout, the longer you consolidate, the more explosive that breakout could actually be. There are no guarantees here. There are no strict correlations where one must happen like the other, but I don't know, you tell me. What happened after this bit of consolidation? Yes, we still fucked around for a couple of months, and it did take a couple of months, 2 months until we kind of really started to fly. But then, you know, within, what is this, like, I don't know how many months that is, but within, you know, not that long, you know, the price pulls like a 6-7 times gain, you know, nearly a 7 times gain, 6.5 times gain, you know, within 260 days. So, you know, big consolidation. Yeah, it's a good thing. It is most definitely a good thing. Now there are exceptions, you know, but there are more times that prove the rule. Here, we're in a bear market. We're trending down. We're punching in lower highs consistently across an entire year. It couldn't be more obvious. That's why at the end I went short as well. The market starts consolidating at a low, and that can tell. And because it's been consolidating for so long, I mean, for so long, the 6K floor could not be broken. Look at this. You're starting to jump ahead. I know you're thinking about 30K. Just wait. Just give me a second. I'm going to get there. I promise. But you know, this is really important. We got to get to this part first. 6K could not be broken for an entire. Actually, 6K couldn't be broken since November of 2017. If we go back that far. So you know, and then at the very end, we're literally just lying down at 6K, not doing anything. That is a lot of consolidation, and that is a lot of emphasis put on one level. 30K, really ringing some bells right now. And of course, the result is the price halves, minus 50%. That's a big deal. And you know how long that took too? Took a month. Look at that. Took a month. So, you know, and that's after Bitcoin already crashed by 68%. It then crashed by another 50% on top of that, for a total loss of an 84% drop. You know, so we really start to put these things in perspective, and we understand very clearly that more consolidation means bigger breakouts. So let's come back to the present day. We've been consolidating for some time. Again, we're ignoring this little bit of price action here. It has been 135 days. If we cut this out, it's been 100 days. 100 days of raw consolidation at a market top, at major resistance. Look at this blue line. The current price is our major resistance. This is the level that we were finding support off massively. That's number one. Like, we got big bounces off it, which strongly validates a line. How do you validate a line? You get big reactions, number one. You get reactions across the long term, number two. 514 days, even longer than that this support level held significant weight in the market. What was it actually, if we just measure it all the way back? 522 days. 522 days that this market held significance over the market. That this level held significance over the market, and with big drops. And what happens when we lost the level? Big drops, big pumps here off support, and when we lose it, big drops you know, when we collapse below that support level. That tells us everything we need to know about how significant this area of resistance slash support is, and we have been consolidating here. Now look, I'm not trying to put any crazy ideas out there. I'm really not. But if you're a technical analyst, and if you think that markets express similar characteristics across time, if you think that assets typically tend to express the same kind of characteristics in different flavors, they rhyme, the history rhymes, if you think that that's the case, and you do because you're here, then this is going to look like an interesting opportunity to you. I'm not saying we're breaking out. I'm not saying we're going up to 35k, to 40k, to 69k. I'm not saying we're getting back on these yacht parties with your models in Saint-Tropez. We're not there yet. We're not there yet. Right now, we're stuck in Rhodes. Shout out to Rhodes. Hope they are doing okay with the fires. You know, we're sticking to the budget Greek islands right now. We're not at Mykonos level yet. We're not there yet. You know, so let's not get too excited. But what I am saying is, hey, there might be something here. You know, we've been consolidating at a high for a long time, and you've just got to ask the question, why? Why has the market not sent us down yet? It's a resistance level, right? What do you do at resistance? You get rejected. Here's what happened when we got rejected. We actually made my point even stronger. The 25k level, we've all known this since before we even got here. Go back and watch my previous video. We've always known this. The $25,000 level has been a very important area of resistance when we were below it, but it was not as important as 30k. We knew the 25k level was important, but it wasn't as important as 30k. So what happened? We got rejected off 30k, and we came back down to 25. 25k is not an important level compared to 30k, and we still bounced off it. That's why I said that this strengthened my point. You know, what would have been a strong area of support is 20k. To $20,000. $20,000 is a big round number. It was the bear market high, bull market high of 2017. 20k is engraved in our minds. 25? Not really that big of a deal. Yet, the market, after hitting arguably the most formidable, most dangerous, most heavy area of resistance that it has potentially ever had in its life, it just bounces off 25k? Do you know what I mean? Like, and I've been seeing this bearish sentiment develop over these last few weeks. And the people that are bearish have so many good reasons to be bearish. I actually agree with them in a lot of cases, you know. But at the same time, and the long and short ratio, by the way, is too bullish right now. It's too bullish. Too many people are going long right now. So, you know, the long and short ratio doesn't even support this. But at the end of the day, what we're seeing here in this market is abundantly clear. We're at a high, and we're not getting rejected. We're staying up. We're consolidating. Now, what happens when you keep on knocking that fucking door is that eventually, if you've knocked it enough times, look at this, look at this, look at this, 30k right here. One, I'm just gonna point to them. Hang on, let me do an arrow real quick. Bam, right there. We're back to the arrows now. Look at this. If you guys remember the arrows, tell me I remember the arrows in the comment section. 3, 4, 5, 6. 6 attempts at the support area when we fell down here in summer of 2021. And that's on top of all of the attempts right here. 6 attempts on support. And then over here, 1, 2, 3, 4 attempts at this 30k area. We're more or less, it's the same thing. You understand my point. The more times we hit an area of support or resistance, typically, the more likely it is to break. It's just, you know, and it gets excessive. Like sometimes our resistance support areas are too strong, like 30k, you know, so it's really hard to break. Sometimes they're not very strong at all. $44,000, $45,000. We fell below it in January of 2022, at the very beginning of 2022. Attempt 1, 2. Why are my arrows gone? Let me put them back 1 sec. Attempt 1, 2, 3, 4. 4 attempts. Number 5 is successful, but it's a deviation, so it's kind of not the same thing, but it does break out above the line. And that's my point, is that the more we test these levels, the more likely they are to break. And That's going to depend on how strong are the levels. Well, we know that 30k is incredibly strong. So we're not expecting it to break quickly. We're not expecting it to break without a fight. But here's the fight we're getting so far. The fight we're getting so far is that we hit $30,000. This is a really deep dive, guys. If you are appreciating this, every interaction you give me with these YouTube videos helps a lot. Every time you check out the exchanges that are giving you huge bonuses, you're getting free cash, you're getting free money that you can trade with, and you're also supporting the channel, guys. Anything you do is much, much appreciated here. What we got when we first hit the $30,000 level was a rapid, within 8 days, 12% drop. What happened the next time? Look at this. It took us 3 weeks until we actually started to fall out of this range. Do you know what I mean? Like, what I'm interested in is I want to read between the lines. I want to do the analysis that nobody else is doing. You know, and I'm not trying to bullshit myself. I'm not pulling out fucking astrology or all the other crazy shit that some traders in this space do, which I think is really cool, by the way, if you can make it work. Like, I wish I could read the fucking stars and understand Bitcoin. Obviously, that's not how it works, but if it works for you, then good job. You know, but for me, I'm keeping it very logical. I'm keeping it very logical. I'm keeping it very rooted in understanding human psychology. And what I'm seeing right here, you tell me if I'm wrong in the comments, is that the first time we hit 30k, since we fell below it, which, by the way, this gap was 308 days. That is like 10 months. I can't do the math on that. The first time we hit 30k in 10 months, we got a quick rejection. I mean, yeah, it was slow, but it happened. You know, the rejection started quickly. And the second time, we couldn't get rejected. The bears couldn't send us down for 3 whole weeks. And then when they did send us down, here's what happened. We zoom in even closer. It's taken the bears 2 weeks to drop us down by 8%. What happened here? We fell down by 12% within less than a week. You see my point here? Like, it's so obvious. It is so obvious that the market right now is stronger than the market was back in April. It is stronger because it's been consolidating here. It is stronger because the bulls know and the bears know that the bears do not have enough strength to take the market down. I'm sitting here trying to be as objective as possible, obviously bearing in mind that I love Bitcoin and that I love this investment and, you know, whatever. I'm trying to be as objective as possible, and I can see that we have been at a critical area of resistance, an area of the market where when previously we came here, it triggered within 3 weeks a double in Bitcoin's price. Bitcoin doubled off this price level. When we fell below this level, within less than a week, we fell down by 40%. That's what I'm seeing. I'm sorry, this is the wrong level. No, this is the correct level. We fell down by 40% within 5 days. Okay, when we fell below 30k. That's the level we're dealing with. We're dealing with a level that can cause Bitcoin's price to double within 3 weeks or to halve within less than a week. And right now, exactly, silence. Hope you've enjoyed this one. I'll see you all in the next one. Check out the links to all the beautiful offers I've got available for you in the description down below. Like I said, over $100,000 in bonuses available with BingX, up to 30k with Bybit. Bybit remaining the best in the space, obviously, but BingX does allow you to trade all of these stocks, forex, indices, and commodities. It is well worth checking out. It's great for you, great for me, and you're going to be happy with them. So check them all out with the links in the description down below. Very, a big one. A big one for this YouTube channel. It was my first time back in 2 weeks. I very much enjoyed the break. I'm so happy that the market did nothing in that time to allow me to have a peaceful break. But at the same time, I'm always ready to go. I want you guys to know that. If you see me, because I know some of you get a little bit concerned. I don't actually take breaks. If Bitcoin gives me a break, then okay, I'll accept it. But I'm not looking for breaks. I don't need them. I'm chilling. All right. I'm a young guy. I've got the energy for it. But if the market is quiet, there's not much I can do. But 2 weeks of space. I'm sure many of you have kind of taken some steps back from the market, just a little bit maybe, because there's just not much to do. 2 weeks of space, can oftentimes be the biggest blessing in these markets. You know, it's one of the things that I've told VIP members too. I know you don't like to hear it, but it doesn't really matter. It's still true. You know, if you've had like a bad streak, I've told this to you guys publicly as well. If you've had a bad streak, if things have been going bad for you as a trader, one of the best things you can do is stop trading. Just wait, give it a couple of weeks. You're going to regain perspective. You're going to stop being so upset about it. You'll still be upset that you lost money. Obviously, you can't not be upset about it, but it will weigh on your decisions less. You'll be less emotional about it when you've got more space with everything. We know how this works. When something bad happens in your life, personal, whatever, if you give it time, it will get better. It will get better. At least the intense emotions will get better. So when you allow yourself to do the same thing for your trading, you're actually giving yourself a big benefit here. So, you know, while of course it's not ideal that we're not getting much volatility, take this as a blessing. It's the best thing you can do. You can either be annoyed about it, or you can be happy that the market gave you a break to catch yourself, regain your perspective, and see where you're sitting. You know, I'm fully aware of the possibility that I can be completely wrong about this, and you guys know my thoughts about that. They haven't changed. We can drop all the way down to $25,000. I hate that I say this stuff at the end of the video because the idiots, you know, haven't gotten to this part. And but whatever, you know, we can drop down to 25K, and we're still potentially, as long as we bounce off that, we're still sideways. We're still doing the same thing. You know, yes, okay, we're doing it in a big percentage range, 25%, but what was this range right here from top to bottom? 27%. Yeah, there you go. All right, guys. I'll see you all in the next one. Cheers.